So today we had a huge gap down in the markets. If you look at the NASDAQ 100, we are officially negative 15% downwards in this correction. That is equivalent to what happened back in August 5th, 2024. But are the bulls done here? Should we flip positions? Should we be expecting a bear market going forward? I'm going to dive into that, and I'm going to talk about the technicals and what's going on with this particular market, especially going into April 2nd, which is now called Liberation Day. So let's go ahead and dive into it. I'm also going to show you what I did and the changes I made to the portfolio, just given the news that we are facing right now in this market. Okay, so let's go ahead and jump into it. Trump tariffs. All right. So there are the dirty 15 countries that could be hit the hardest by the Trump tariffs this Wednesday. So Trump is set to launch reciprocal tariffs against all other countries that have their own duties on US goods or other trade barriers. All right, and they're calling this the dirty 15. So the market does not like uncertainty. It doesn't know, how big are these tariffs going to be? Which exact countries are they? And that doesn't set well for the market. All right, that doesn't set well for short-term growth, short-term, trade deficits and everything like that. So, the market is definitely not taking it very kindly here, considering that QQQ broke below that 466 level. All right. So that is the most recent news that is rocking the markets. If we do look at the VIX, okay, we spiked all the way back up to today. We got all the way up to 24. Now we are trading down to 21 on the VIX. So fear is still very elevated here. And this is what I'm thinking going forward. So what I like to look at is, first I look at the heat map. All right. So the heat map, I just go to finviz.com, go to their heat map. And this is going to show you all the stocks that are basically down and all the stocks that are up today. Today, stocks are actually up. Now, this is where I saw a few tech names getting bought up, right, by the institutions. Specifically, it was Intuit, IBM, Accenture, okay, Cisco was one, and then Texas Instruments. All right, those were just a few, and Apple today. Apple was green today, even though, the market tanked. A lot of the defensive stocks have been getting a lot of rotation, and that's something that you don't see in a bear market, okay? In a bear market, if you've ever traded through one, you would know that this whole map would be red, all right? And I want to show you one specific stock on my list, all right? This is a safe haven stock. This is Berkshire Hathaway, all right? If you look at the fundamentals of this company, obviously Warren Buffett's company, PE ratio is 12, owns a basket of some of the safest companies in the stock market. And ever since February 21st, when this market crash happened, okay, we're gonna go to February 21st, which is this candle right here. All right, Berkshire Hathaway is up about, let's just say at the peak, it was up 3% from that date, but right now it's up about 2.81%, okay? So this stock did not see any effect whatsoever from the stock market crash. All right. Actually, I went to the wrong dates. I totally went to March. This is going back all the way to February 21st. So let's go ahead and go back there to the right dates. Okay. February 21st is right here. This stock is up 12%. Okay. 12%. Everyone's rotating into defensive stocks. Now you're probably thinking, well, Ryan, that doesn't matter. It's a bear market. We're heading into a recession. People are just getting into safe stocks. Well, let me zoom back to 2022 for you. This was not very long ago, okay? We're gonna just zoom back to 2022, and I wanna show you what happened to safe haven stocks like Berkshire Hathaway. Well, this is what happened. Berkshire Hathaway went down about 28%. When there's a actual bear market, people don't go to safe stocks. They want to go to cash. And that is what happened back in 2022 when inflation was running rampant, okay? If you look back from where it started, which was, let's just say, March of 2022, so people did kind of rotate into Berkshire Hathaway and then quickly got out, as you could see, negative 27% within a couple months, all right? So that's typically what we see during a bear market. All right, so I'm not seeing this as a bear market, considering that a lot of the defensive stocks on my list are actually getting a rally here. So that's just one simple indicator I like to look at. Also, interest rates. There is still 3 or 4 interest rates being priced into the market. So those are the things I'm looking at. That's why I'm playing this move bullish. All right. I am not bearish on the market here. Even if I was, okay, there's not much more downside. There's more upside risk. So if you are a bear, right now is not a good time to get short the market, considering we just made a new low for the year on QQQ. It's not a good entry point. Your good entry points were up here when we're near all-time highs, all right? So the risk, I believe, is to the upside. In fact, right now we are going to close above 466, which is kind of that line in the sand that I was saying. If we break below, we may see kind of a capitulation flush. That's what we saw this morning. And we may get a close above it. So that is actually a very, very good sign for the bulls here going into Wednesday. Now, tomorrow, who knows what's going to happen? We could retrace this whole move. And then the next day, you know, we could get a face-ripping rally dependent upon what the news is, but dependent upon what President Trump says and what the administration is going to do going forward with tariffs. All right, so I believe that most of the bad news is behind us. We just got to get to April 2nd and really gain more clarity and certainty on who's getting tariffed, how much, and what is the impact to the markets. Then we will see kind of price discovery here on QQQ of where the market's going to go. And then we move forward with that. Obviously, the markets are forward looking. So these are just a few things I'm looking at. And I do not think we're in a bear market. I do think this is definitely a longer drawn out crash. And what a wonderful time to take opportunity. So I'm going to show you the exact position that I took today, and I actually loaded the boats on this. But before I do that, if you do want to work with me one-on-one, join my private mastermind to make 6 figures options trading. That's going to be the first link in the description. Also, if you do have any questions, you can ask me on Instagram directly. I give out free trade ideas there, which is in the link down below. I also have a free newsletter where I give trade ideas as well. So make sure to be subscribed to both of those. Now, let's go ahead and jump into it, okay? Today, I saw, obviously, QQQ dropped quite a bit. So I went to my favorite stock holding, which is Robinhood, all right? If we look at their PE ratio, okay, amazing PE ratio, tons of cash flow. Last quarter, their profit margin was 90%. This is what I like to see on a good value stock, on a growth stock that has a lot of good fundamentals. So what I'm going to do is I'm going to go to their chart and I want to see how does the chart compare to QQQ. This is what you're going to want to look out for when we have crashes for the next time, okay? Obviously, this time I'm going to give you a couple plays, but there are stocks that are performing a lot better and diverging away from QQQ, meaning they're performing better than QQQ. If you look at QQQ, new all-time lows today, right? If you look at Hood, no, not new all-time. All-time lows, I mean for the year. All-time lows for the year. Yearly lows. Let me correct my phrase because it did trigger a lot of people in the comments section. So lows for the year were set on QQQ, all right? New lows for the year. If we go to Hood, no new lows for the year. The lows were printed back in early March, all right, down here at $35. We're pretty far away from that. We're currently trading at 41. So this is what I like to see. I like to see stocks that aren't making new yearly lows. And, you know, Tesla is another one of them, okay? Palantir is another one of them. NVIDIA actually made a new low, yearly low for today. So that one kind of crossed off the list. Most of the Mag 7. If you look at Google, absolutely hideous chart right here. But the value on the stock, I mean, we're in the 19s on the PE ratio. So I still think these are great stocks to get into, but they're definitely going to take longer to recover. So what I like to look at is when QQQ recovers, the stocks that are already seeing recovery, like Hood and Palantir, these ones are going to recover even quicker. All right. So I'm playing these names more heavily in the portfolio because I want to make more gains when we do go up. All right, Amazon's another one that just looks really, really bad here. I'm pretty heavy in Amazon, but I'm not adding anymore, okay? New yearly lows for the day. If we look at Apple, Apple is a strong stock, probably the strongest one of the Mag 7. So this would also be another play if you wanted to start acquiring some leaps call options. All right. I'm a proponent of selling options, and I believe selling options long term is the only strategy that will work as far as beating the market and getting consistent passive income monthly. But right now is a good place to take a stab at some leaps because you're going to see the most gains, and most of these stocks were already at yearly lows. QQQ is, just down 15% today. I mean, sure, could it go down 18% tomorrow? I don't know, maybe, but I don't think we're going more than 20% down. I don't think we're in bear market territory here. I think this is pretty much the lows of this crash. And then once April 2nd comes around on Wednesday, I think the market moves forward, puts this news behind us, and we start recovering. Are we going to recover in a V-shaped type recovery like this? No, I don't think so. I think it's going to be more back and forth, and then a slow upward trajectory. So how I played it today was on Hood. When Hood bounced down here under 40 in the morning, all right, I went ahead and went into the portfolio. This is just obviously one of the portfolios. If you haven't subscribed yet, I do plan on turning this into 10 million in the next 7 to 10 years. So make sure to subscribe, hit that like button. Would really appreciate it. But let's go ahead and dive into what I did. So at first, I only had 6 leaps call options on this, the 35 strike, going out to January 2027. Why did I go out so far? Well, I might hold some of these for a long time. But as you can see, I loaded up to 15 leaps call options at the 35 strike. So again, you could go to the options chain. I am not opposed to going out to March 2026, which is 354 days. Technically, that's not a leaps option because it's not longer than 365 days, but could still be in that gray area of qualifying as one. The 35 strikes on these are great. Okay, you're going to pay $1,300 to control 100 shares versus just buying 100 shares at $4,100. Okay, so you get to control the 100 shares. The theta decay is about $1.45 per day. I like that, not too bad. But if you go out and you're willing to pay more money, right, for the ones that I did, you're going to pay $100 more per contract, maybe $200 more. The theta decay on this is about $1.08. So it's about 50 cents less of theta decay. I like that just in case it takes longer to recover. But again, I'm not expecting that. I'm expecting Hood to recover in the next 30 days. So that's kind of what I played. It's a little bit higher delta as well because I do want a little bit more exposure. So that is why I did this leaps option. Now, if you want to be super safe, you do a Hood, 39 days out, and you just go to the 30 delta, 37 strike, and you're going to be fine there. I have a bunch of those. As you can see, I have the 36 strike, I have the 42 strike, the 36, and the 35s. So, but I loaded up on this position, now bringing my total position on Hood to over $120,000. All right. That's how much I believe in Robinhood, and I do love the valuations on this stock. I mean, the PE ratio right now currently is 26.5. That is less than the S&P 500. So with that being said, with the stock that is in the tech sector, so high growth, good valuations with 90% profit margins, I believe that this stock is going to be good going forward. So I wanted to give you that leaps idea. For potentially tomorrow or Wednesday or whenever you think is safe for you to get into these. But again, the risk on these is losing the entire premium you paid for them. But the risk to reward is very good right now, considering that Robinhood is from the all-time highs is down about 38%. So I do believe that this stock is going to see a major growth trajectory once QQQ starts to recover and we get April 2nd behind us. All right. So yeah, that's going to be my update for the market. I'm not bearish at all. In fact, I think if you are bearish at this point, you're a little late to be bearish. You should have been bearish when the market was at all-time highs. Okay. But now we're making new yearly lows in major correction territory. So this is kind of the line in the sand to start placing your bets and start taking on some risk. So I hope you enjoyed the video. Give it a thumbs up if you enjoyed these updates, and I will see you in the next one on Wednesday. Here's another video you can watch on one of my longer form tutorials on exactly how I make a full-time income options trading. I'll see you in the next one, and take care.